G'day, I'm Hugh Bowman from Action Coach. So today I've got some investment advice for tradies, and in particular, the don't do's. You see, I meet a lot of tradies out there that seem to completely botch up their investments. In my view, take way too much risk by spending too much money or too little money, or at the wrong times or on the wrong things, and think they're being smart around their portfolio. The reality is that's just not the case at all. Now, I do know a bit about this because I've been investing in shares and property for like 30 odd years. And I've even written 2 books on it. And so I think I know a few things. Now, back to the tradies. One exception is, they do pretty well, is their property. In terms of real estate, they usually make pretty good decisions. But you think about this, they've probably spent 10, 20, 30 years working on property. They know about roofs and leaking. They know about foundations and cracking. So the same sort of thinking should be applied to all their other investments. So this is where the don't do's come in. And like the top one at the top of the list, I meet a lot of people who seem to have crypto. Now, crypto doesn't actually earn any money. All it does is relies on the people buying it on the hope it's worth more, so the price fluctuates, goes up and down. So I sort of fail to see why it's a great investment. I often ask guys, say, well, would you sell your house and buy crypto and make a squillion? And they go, no way, I'd never do that. I.e. the risk is way too high because they see it moving so much. In that case, like if you're spending, a large amount of money, it's just going down the drain. And you can't make enough out of it unless you have a large investment in it. So, just think about, you should be spending way less than 20 grand, 10 grand, even 2 grand sounds like a lot because it's kind of closer to gambling than anything else. So unless you've done a lot of training and can prove that you can make money out of crypto, you probably shouldn't be there at all. Now, the other one, which is much more sensible, and I know a lot about this, but it's about shares. Now, when it comes to shares, you've got to be careful and do the learning too, but in particularly what we call, penny stocks. Penny stocks, or stocks that are cheap in price, thinking that there's a good opportunity there. And pretty much they're illiquid or they are unproven. And again, they're highly risky again. So careful, don't be going to penny stocks. And also anything that's less than, ASX, ranked in the top 200 or preferably 100, you probably shouldn't be there either, because in the ASX, every share is graded on market capitalisation. Anything more than 50, and if you haven't got the education, that's risky in itself. And basically, when it comes to shares, we're talking about you've got to get a balanced portfolio. So tradies often have a very unbalanced portfolio. So that's a problem in itself. So if you've got more than 20% of equity in any one stock, that risk starts going up. So you've got to have less than 20% equity in any stock. So that means all of a sudden you've got to have between 5 and 12 in most cases. So that's where the risk is up. So what I can employ, unless you can prove that you can make money in both a bear or a bull market, you probably shouldn't be investing a lot in shares. And what I mean is, bear market is a market that's going down, and a bull market is one that's going up. Now, everyone makes money in a bull market, but when things are a bit tighter or a bit down a bit, that's when people are caught out. They're seen to be the people who are swimming nude seem to get shown up. And so you be really careful about how much money you put in there and how much learning you put in there, and think about how much effort you put into learning property and how many years you've done in doing that. Now, I actually run a program based around this, making smart investments. It's not particular investment advice, but just being smart with investing and keeping you on track so you don't fall into these traps of jumping on unweighted portfolios or cryptos and things like that. If you want to know more about that, a great place to start is to have a look at my book, The Wealthy Tradie. You'll find a whole lot of information there, or reach out and get in touch. Hope to talk to you soon.